415 Stories is brought to you by Mobile Action. Make your app business a success with world-class data. Sign up on mobileaction.co and apply the promo code 415 to get 15% off for any plan. Hello everyone, welcome to this amazing episode of 415 Stories. I'm your host Taha. We are having insightful chats with amazing founders and investors from San Francisco and the Bay Area. And today we are sitting down with Charles Hudson, the managing partner of Precursor Venture Capital. And we are going to talk about Precursors, their funding mentality, and most importantly, what will Charles recommend startups to survive during the coronavirus outbreak? Hey Charles, welcome to Pod.
Thank you so much for having me.
Sure, I'm happy to have you here. I'm super excited, and I actually don't know where to start, but I'm impressed by your background. So can you please tell about your story? What led you to found your latest venture?
Yeah, so boy, where to start? So I was a partner at a venture firm called Uncork Capital, which was once upon a time called Softtech, that was started by my old partner, Jeff Clavier. And we were one of the early micro VC funds. And what I noticed when I started seed investing in 2010 was a good sized seed round back then was $1 million. If you raised more than that, that was considered a big seed round, which seems kind of weird to say today in a world of $4 and $5 million seed rounds. And over time, what I noticed is the most experienced seed funds with the best returns and longest track records were getting bigger every time they raised a new fund. So they went from 10 or 15 million to 25 to 30 to 50 to 80. And now some of these seed funds are north of $100 million. And as those funds got bigger, what I realized is it was much harder to work with entrepreneurs that wanted to raise less capital or had less evidence because, that founder coming in with an idea was competing with a repeat founder who might have been able to bootstrap for a while and be farther down the road. So I really wanted to set up a fund whose primary purpose and focus was really on investing in super early stage founders, sort of pre-product market fit, pre-traction. And I felt like there was a really underserved niche of founders in that community. And I wanted to be a part of helping them bring their dreams into reality.
Great. So what's your focus on this venture? So are you kind of a stage diagnostic venture capital firm, or is there, like, as you said, a sweet spots between like pre-seed to Series A, let's say? Like everyone says that, but what's your take on that?
So we're very focused. So we don't have any, I would say, sector theses. Like we're not SaaS only or consumer only. We have a horizontal focus on pre-seed. And for me, pre-seed is really companies that are raising $1 million or less that are pre-product market fit, sort of pre-traction. We'll do a little bit of seed investing. Maybe 1 in 4 companies we invest in is a company that's going to raise a $3 or $4 million seed round right out of the bat, or they raise a little friends and family money, and this seed round is their first institutional round. But our focus is really on being that first institutional investor for companies.
Great. So why is that? Just because I think that there are some data or some fundamentals that you've discovered in the market to invest in that area, right?
Yeah. So I guess what I would say is I think that this whole seed market that we live in, it's not really one big market. I think there's a couple of different actually sub-markets within seed investing. I think there's a seed market for repeat founders who've already been successful in a previous venture. I think those people, generally speaking, these repeat founders who've been successful can raise money at high valuations, and they generally come to their fundraise with a set of pre-existing relationships. So they had VCs in their last company or they know people. So those people, they're going to get premium valuations from premium venture firms. So that's one. That's actually a really small number of people that fall in that bucket. So that's one bucket. I think there's another bucket of people who maybe haven't been founders before or haven't been successful, but have social capital or high degrees of social proof. So maybe they were a low single digit number employee at a really important company. So think, if you're employee 5 at Stripe today or employee 2 at Instacart, you might not have been a founder before, but your low employee count at an important company buys you access to fundraising, and you're going to be able to raise money on terms that are better than the average entrepreneur, maybe not quite as good as the repeat folks, but that in today's environment is a pretty low risk person. So I think like people feel like, okay, I'm willing to bet that like 2 people from Stripe who worked in fintech, if they're doing a new fintech company, I'm probably going to give them the benefit of the doubt. Right. And then and you just say, look, the opportunity cost of leaving a really good company when you're an early employee with a lot of shares is very high. So also theoretically, you would only do that if you were really excited about the new thing that you're building.
Yes, I love that.
There's a third bucket though, which is what we do, which is there's all these people who are neither repeat entrepreneurs nor are they low employee count people from companies that you know. They're just smart people who don't have the same level of access to capital. And we focus on people who we think have good ideas, but maybe less connectivity to capital when we meet them.
Great. So let's talk about the, the topic that everyone's waiting to hear. So I believe that I think you have invested more than 160 companies, right?
That's right.
How's those companies like at first? How's those companies going like that in this outbreak environment?
You know, when you have a portfolio of 160 companies, it's very hard to give a portfolio wide answer. Some of my investors have said, "How's the portfolio doing?" I said, "Well, guys, it depends on what company you're asking me about, on what day, under what
Uh-huh.
circumstances." The unfortunate thing for us is like there's no universal answer for how's the portfolio doing. What I will say is we went through like many investors and said, "Okay, let's look at every company on two dimensions. How much exposure do they have to the virus and virus related economic fallout, and how much cash do they have?" And what I can tell you is, if you think about it as a 3x3, you could be red on cash and red on COVID exposure. Obviously, nobody wants to be in that bucket, right? Like short runway, high exposure, that's a scary place to be. You could also be in really low exposure or maybe positively benefiting from
Hmm.
COVID. So you think, remote work, distance learning, food delivery, you could be positively exposed to COVID and have a long runway. Obviously, every VC wishes their whole portfolio was in that bucket. We have companies in every single quadrant. And so the challenge is for me, context switching every time I go from one meeting to the next one, which is to remind myself, I might have just talked to a company that, say, for example, is in the travel space with a short runway. That's a tough position to be in, right?
Yes.
But then you might flip to talk to a company that's doing distance education for higher education students that's green.
People will love that, right?
People love that. And so I would say one of the hardest things about this environment right now is the context switching you go through as an investor, because every single company in our portfolio is in a different one of those 3x3 one of those, I guess, not quadrants, is a different one of those 3x3 squares. Every company's in a different place. And it's kind of jarring every day to talk to
Mhm.
companies that are all over the map.
Hi friends, I'd like to tell you about something. You probably know how hard an app business can be. Publishers don't know what apps to build, how to monetize them, or even what to price them at. Advertisers and brands don't know where their target users are, how to reach them, or even how much they need to spend in order to do so. And investors are not sure which apps or genres are growing the quickest, and where users are really spending their time and money. At this point, my friends in Mobile Action have a solution for you. You don't have to guess. Make your decisions based on data. Mobile Action helps you to make your app a success story. Companies like Disney, Tencent, Shipt, and Let's Go use Mobile Action to better grow their apps with world-class data. Sign up to mobileaction.co and apply the promo code 415. Join over 200,000 people using Mobile Action today. And let's get back to this amazing episode. Great. So I guess you have been advising those companies about outcoming those outbreak environments. So what will be your advice to the startups right now? It's not industry related, it's broad-wide startups, like most of them suffering from, their layouts, people are getting out of the company, and funding rounds are not intentionally, but a bit low than that Silicon Valley average. So what was your take on this about funding rounds, maybe hiring or adapting to working from home? What's your thoughts on there?
It's a big question. So I think this has probably been one of the hardest. I mean, I started my investing career in in 2000, so I've seen 2001, 2008, and now COVID. I'll say what makes now particularly difficult is, with financial crisis, I think there was some sense about how long it would last because that felt more like a man-made disaster. This is not that. This is a pandemic. So I think there's two challenges for companies right now. One is, how long is this going to last? And like your perception of how long this is going to last dramatically changes how aggressive you are in terms of like cutting your burn rate and making changes to the business. So that's one hard thing. The second thing is like, well, what is the world going to look like on the other side? And I'd argue there's some categories where it's unclear to me. Like I think about concerts. Like, will concerts as we know them come back? Probably, but probably not 2020. Maybe 2021?
Have you seen Dice?
No.
There's an app called, I don't know how it's pronounced, but it's DICE. So I seen yesterday on Twitter, I think there are like lots of well-known artists who are on the app and making a virtual concert. And by the
Yep.
way, like just name any of your favorite bands or artists. Like some of them are here. Like I'm really shocked that it's free, I think, and like people are starting to see, I think, more adapting to that side. What do you think about that?
I think this is what's interesting to me. It's like I look at some of these facility-based fitness classes, right? That you maybe paid 25 or 30 bucks to go to in person, but now you can do them from home for 10 bucks. And the question is like at that lower price, do you get more volume? Like do you get 3 times as many people because the instructor scales much greater? And like do you still need the physical brick and mortar facility for that studio? So I think for me the big question is it's not just how long does this last, it's like when we come back out of this, what things will come back in their sort of previous form, and what things like concerts like you mentioned come back in a totally different form that means that like the assets you had before, relationships with big venues and expensive sound systems, that just they're not assets anymore. I just don't know. So I think this is a very difficult environment to plan. And for a lot of companies, they're planning and replanning every month because every couple of weeks what we know about the world is dramatically different than what we knew before.
So I believe, like, have you had a like kind of LP meeting beginning of the year? Like, when's your annual LP meeting?
Our annual LP meeting is in November. We do quarterly call or meeting. Right now it's a
Hmm.
call with our largest investors. Obviously with COVID, there was no reason to wait for the meeting. You
Hmm.
got to get the information out sooner. But again, as an investor, the challenge is what I think on Monday and what I think on Friday could be really different in this environment.
Hmm.
So you have to give your investors some sense that you're working on this stuff and that you have color, but like by the time you send it, the data that you collected could have changed dramatically.
Yeah, I was going to actually ask the same thing. So, what kind of KPIs have you talked over the call, and how you see that KPI is going to end up in the last, let's say in the following LP meeting? So, are you going to catch up those KPIs, or what's your game plan there?
So I think we took a different approach this time than normally. What we do is we say these are all the portfolio companies, these are the current valuations, these are the ones that we're most excited about, these are the ones that we think have tremendous potential to return the whole fund. My hunch was in March nobody wanted to know that. Everybody wanted to know the same thing, which was how bad do you think the exposure is going to be to your portfolio from COVID? So the team and I took every single company and tried to rank them based on runway and COVID exposure. And we put them into buckets. And then if you
Mhm.
think about that 3x3 bucket of like runway and COVID exposure, we then tried to say, okay, given what we know about, these two, the intersection of runway and COVID exposure, how comfortable do we feel with the company's current valuation? And there were some where we just said, look, if you have a short runway and a lot of COVID exposure, it's very possible that you'll go out of business. Not that you're going to be worth half as much, but that you're going to go to zero. And there's also a chance that, like, even if you have green runway and limited COVID exposure, that you might be worth less than you were in November. So we sort of built a matrix for every one of those 3x3 outcomes and said, okay, let's apply some discount to every company based on where they land in that bucket. And that produced what we call like our exposure matrix, which basically said, hey, we're really pessimistic. If you believe our pessimistic assumptions, this is how much of our valuation we have at risk. And we shared that with our LPs, and some of them, but we tried to give it to them in a way that said, here's the raw data in a way that you can change your assumptions. If you want to be more aggressive in terms of like what happens to companies in each box, there's some dials and levers you can tune.
Wow, it looks interesting approach. So I actually wonder about your predictions about like how all these things gonna end, Charles. Like when we're gonna go back to real world, or what's gonna be like real world mean to you? Like what's your take on that?
God, this is such a hard question. I literally think about this every day. I ask myself like a couple of questions. I think I bucket it into when do I think people will feel comfortable leaving their homes to go back to work? Which I think is like for most people, it's not discretionary. They have to work. Like they don't have the savings to not work. And so I think like going back to, but I can envision a world that people are like, I'm willing to go to work and come home, but I won't go to the gym. I won't go to a restaurant and I won't go to like a big dinner party or a cocktail party, but I will go to the office and come home. I think that's step one. Then I think step two is like, when do people feel comfortable engaging in social activities, which might be going to a dinner party with 10 of your friends? Or it might be going to a barbecue where you don't know every single person there. That's, I think, the second wave. I think the third wave is like what I call riskier behaviors, jumping on an airplane again without being really nervous or taking an international vacation. And then I'd say the last of the last is like, when would I go to a concert or Coachella or a really, really large or Burning Man, like where social distancing is really not possible. I guess I feel like if we can get people feeling comfortable going back to work this year, I think that's a success. I'm not sure that's going to happen, to be honest, because I think a lot of this comes down to like how much trust do people have that we have good protocols in place for tracking, identifying, and like quarantine. I mean, everything I've read says, a virus, a vaccine is a ways away. So it's really going to come down to like our ability to track and monitor this. And I think
Uh-huh.
the hard thing is like confidence is a funny thing. You feel confidence when you trust that the people responsible for something have it under control. And I don't know when that's going to happen.
I actually like I think seen on CNBC today that a YC startup is working on some vaccine or something. Have you seen that?
I didn't see that. And I know there's a lot of good mental energy being spent on trying to find a vaccine. And I'm really hopeful that they're successful. I just think like historically vaccine timelines have been longer. And so like my assumption is that for 2020, it's going to rely more on people feeling comfortable that we know more about how the virus really propagates, whether having antibodies really means that you're sort of immune from reinfection. There's just so many open questions. I think, we can't shut the economy down forever, but I think most people feel like I don't want to go back to work until I feel like things are under control.
I mean, I hope everything will go okay, and I hope it will be not take more than we ever expected. So let's give our hopes to all of that. And all right, that was a great chat, Charles. Thanks for coming by.
Thank you so much. I appreciate it.
Sure. And we came to the end of this episode of Forum 5 Stories. You can follow Charles on Twitter at C Hudson. And please let me know what you think about the podcast via Twitter at Forum 5 Stories. You can also subscribe to the newsletter on forum5.substack.com. And thanks for watching. See you on the next episode.